Okay, Andrew. So just tell me about current trends in the market.
Okay, so what usually happens towards the end of any market year is that the inventory begins to go down towards the holiday time. Either homes sell or homes are taken off the market to be resold again in January of the following year. So that is the case. Usually, inventory goes down and things slow down in terms of sales volume overall. So one of the interesting things that's happening this year specifically is that not only is it the inventory was very high before, now it's coming down, but it's particularly slow. So you have both the combination of the this time of the year in terms of the holiday season, but also the fact that this year being a very strange one with the interest rates and the lack of surety on the buyer side in terms of what will happen with interest rates, it's a kind of a lull in the market. And so the market trend right now is realtors like myself who've been in the business a long time and know what the market's doing to getting buyers to actually actively look in the market and to actually actively purchase. The idea being that right now is a lull. It is an opportunity for buyers that rarely happens in the GTA. And so my advice, certainly at this time, if anyone would take it, is if you're a buyer, take advantage of this window because you're at the bottom of the market. And certainly, as we will discuss in terms of mortgage interest rates and such, the opportunity is not going to be here for long, as inevitably things will really start picking up towards the first quarter of next year.
Right, right. And interest rate is the main thing, right? That determines the market. Right now, probably everybody is thinking that, the interest rate is at the peak and we might not see a big hike in the interest rate. So I think probably this is the right time to buy if you are looking to buy the house.
Absolutely. So, Divyang, let me ask you probably a question you get a lot, and it's the question right now. So, what is happening with the current interest rates?
Yeah, so that is like the market topic right now.
Yep.
So there are two types of mortgage rates available in the market. The first one is the variable. So variable rate is always, depends on the prime rate, which the Bank of Canada decides probably every month. And right now we are seeing that since last 2 months or since last two meetings, they didn't hike the rate. The reason is whatever the measures they are taking is taking effect, and the inflation is getting down, and that is what the Bank of Canada wants. So right now, the variable rate mortgage, whoever has the variable rate mortgage, they will not see any kind of payment hikes because the prime rate is the same as last month. And second part is the fixed rate mortgages. Now, the fixed rate mortgages are depend on the bond yield market. Now, since October, in the October, I think we were at the highest peak for the bond yield. I'm talking about the 5-year fixed rate mortgage. And right now, it's almost like 90 basis point down. So we are seeing since last couple of weeks that all the lenders are reducing their fixed rate mortgage. And definitely we will see more reduction in the fixed rate mortgages in the coming days. So if you are thinking to get into the fixed rate mortgage, I think you should wait. If you have a closing time coming up in like next 1.5 month or something, I think you should wait to get the base competitive fixed rate mortgage. So that's what happening in the interest rate market.
Gotcha. Divyang, I couldn't help but notice. I was looking online yesterday. The variable rates were significantly higher than the fixed rates. As a mortgage professional, what does that tell you about the thinking of the banks?
Yeah. So as I said, like the variable rate mortgage and the fixed rate mortgage, they are totally different concept. They run on different scenario. Like fixed rate mortgage is depend on the bond yield. So if the bond yield is going to increase, then the bank is gonna increase the fixed rate. However, the variable rate mortgage is depend on the Bank of Canada prime rate. So if the prime rate is goes up and down, it's gonna change the variable rate mortgage. So that's totally separate part. And but I'm not a fan of fixed rate mortgages because if you see in a longer term, over the period of like 25 or 30 years, always the variable rate is gonna win, and this rate will save you thousands of dollars as if we consider the interest on the mortgage.
That's very interesting. Good advice. I didn't realize,
Yeah.
the difference between those two, how different they are. Good
Yeah.
stuff. Good stuff.
Yeah. Okay, Andrew, can you tell me about, like, based on your expertise in the real estate market, like how the neighborhoods like in GTA or in around the GTA, how they are performing right now?
A very good question, and actually several different answers. But one answer kind of satisfies all of that is that GTA is very different on a case by case basis, and that is particularly interesting to see in a market like right now. Things are slow in many areas.
Yeah.
Durham, as an example, York Region, as an example. You find the suburbs of Toronto are slower in general, and homes are sitting on the market. In fact, for Toronto Real Estate Board, on average, days on market is about 39 days right now. So well over a month, which is quite high.
Yeah.
At the same time, once you get closer to the core of Toronto, and this is kind of a rule of thumb for folks that might be buying in the city of Toronto specifically, is once you get closer to the core, St. Clair West, Bloor West, sometimes closer to the annex, homes are sometimes selling in multiple offers still, literally to this day, which is a strange thing to see. So the interesting thing about the GTA, and one reason you want to make sure that you know specifically which area you're going into, is that some areas will have a month and a half, 2 months on the market with a lot of flexibility and obviously the ability for the buyer to negotiate with the seller. While there's other areas, you're having 11, 12 offers, as I've seen in the past couple of weeks. So obviously a different tactic necessary in that area versus an area where something is sitting and there's some flexibility with the price. Something to keep in mind when you're looking at the GTA.
Yeah. Okay. That's good to know that, still people are getting like coming with the multiple offers.
Yeah.
So that's strange to see, especially in
Absolutely.
this lower market.
Very weird.
When the interest rates are high, it's difficult to see. It's shocking to see like people are coming with lots of offers.
Yeah. Again,
Yeah.
depending on the area, but some areas are just always hot, and the
Yeah.
GTA is like that.
Oh, okay. That's good to know.
So, Divyang, one question that I always get asked, and I find this really, really important, is what
Yeah.
exactly is the mortgage approval process? What's involved?
Yeah. Okay. So mortgage approval process, it's, if you see like behind the scene, it's a kind of a long process. So let me divide this process into separate small pieces so it will be easier to understand for everyone.
Mhm.
So the first process is the discovery call. So what I do is, whenever the client calls me, I will ask, a few questions about their financial profile, right? What are their liabilities? How much down payment they have? What are their financial goal for the future? Like how much down payment they have, and in which area or in which city they are planning to buy. So that's how I can get some idea about the client, like what is their main goal buying the home. So that's the discovery call. The second part is the pre-approval process. So pre-approval and pre-qualification is totally different.
Yeah.
If you have a pre-qualification and if you go firm condition, like without financing condition, and if you buy the house without financing condition, there are more chances that your bank may deny your mortgage based on the pre-qualification, because pre-qualification is not the actual approval. However, pre-approval is, we can say, like 80-90% guarantee about the final approval. However, in my case, what I do is I do pre-approval stuff with almost like 99% of surety, because during the pre-approval process, what I do is I ask my clients to provide all the documentations, and then I will review the documentation and I will find out like which lender is the base suitable for particular client. So that way I can assure the client that you are eligible for this much mortgage amount and you can buy the house up to whatever XYZ price. So that's what I do in the pre-approval process. The third one is the application submission. So once I have all the documentations collected from the client, Then I will file the application with the lender for the final approval. The fourth one is the final approval. So after submitting the file to the lender underwriter is going to review the whole application. They might verify the employment of the client, their bank statements, and other stuff. And based on that, they will provide the final approval to the client. The fifth is the conditions. So most of the time, the lenders come up with the final approval with some conditions that needs to be fulfilled before the final funding from the bank side. So that's called the condition period, right? That we must need to fulfill before they start sending the money to your lawyer. So that's how the conditions work. And the final part is the funding period. So on the day of closing, the lawyer is gonna ask the lender for the funding. The bank is gonna fund the money to your lawyer, and your lawyer is gonna finish the whole transaction. So that's how the mortgage approval process works.
So there's a difference between pre-qualification and pre-approved, and you want to be as close to pre-approved as possible.
Yes.
And of course, keep in touch with you once they find the home that they like, the numbers and everything else.
Yeah.
Very, very important. Good stuff.
Yeah, that's right. Because most of the people, they don't know the difference between the pre-approval and the pre-qualification.
Very important.
Right? So, yeah. Okay, Andrew, tell me one of the interesting thing. Like, what are the sellers' motivation, especially in the slower market, like winter, like right now? What is the motivation from the seller side?
Good question. And I've often been asked whether it's a good time to sell or buy in the winter. Now, the underlying theme being in the GTA, usually in a normal year, buying and selling in the winter or any time is actually fine. And people buy and sell any time of the year, which is just a reality that we in the GTA have to live with. Certainly good for a real estate business. But one thing specifically about selling in the winter is if someone's selling in the winter, clearly this is someone who is serious about selling. As a matter of fact, one of the reasons I like this time of the year personally as a professional is that buyers and sellers that are out on the market right now in the winter are usually serious people. They're not usually tire kickers. They're not there to kind of browse. They're usually, if they're buying, they're looking to buy something and they're serious about it. And if someone is selling during the winter time, clearly it's something they need to do, possibly want to do, and are in desperate need to do. But generally speaking, selling in the winter is a really good time. One nice thing is that sometimes, depending on the specific need for the seller, for the buyer, for example, it can be advantageous to possibly allow for the seller to have a firm deal prior to, say, the holidays. And knowing that once they start the new year, they have a buyer qualified and ready to buy their home at a specific closing time. But for the seller specifically, it also allows you to have, again, less people through your home. And knowing that those showings that do happen when you're on the market are from serious buyers, with serious agents looking to actually buy the home. So there's that aspect of it as well. So while sales volume is lower and there's going to be less showings and probably less views in general for the listing, at the same time, those that will be viewing will be more serious. So it's kind of a bit of a trade-off. But I would highly recommend if someone is, especially on the buyer side, looking, know that there are sellers that are willing and able to sell their home at this time. And I would take advantage of that fact.
Oh, okay. Right. Yeah, they will be, getting ready for the spring market, right? So sometimes seller will get a Christmas gift by selling their house, right?
Absolutely.
They got a chunk of money and they can, enjoy with that money the Christmas vacation. And after that, if they are moving somewhere, they can plan accordingly.
Absolutely.
Yeah.
Absolutely.
And for the buyer, they have good time, less competition, you can negotiate with the owner. So that's a good thing about the winter market.
Yeah. Okay, Divyang, one of the things that are constantly an issue with the GTA, obviously nothing is cheap in terms of real estate. Down payment is a big hurdle for people. So what are the down payment options that a buyer has?
Okay, so one of the greatest thing about Canada is the government is supporting the people to buy a house with less than 20%. So that means people can buy a house with 5% down. So let's say if someone is buying a $400,000 house, he just need only $20,000 plus little bit closing cost to buy a house. So that's a great thing. Like there is, I don't think so there is any other way. Like you can buy a house for just $20,000, right? So yes, definitely there are insurances like CMSC insurance is involved in this category because it's an insured mortgage deal, right? But you can still buy a house with just 5% down payment. So if you have a $500,000 house, you can put just 5% down payment. But let's say if you are buying a house for more than $500,000 up to $1 million, then you need like 5% of the first $500,000 plus 10% of the remaining amount, right? So that is what you need as a down payment. But if you are buying a house in GTA for more than 1 million, there is no option to put less than 20% down payment. So in GTA, you must need 20% down payment. However, if you want to get into the GTA market, I would highly encourage, if you don't have enough down payment, like 20%, my suggestion is always, bring your family member on the title, share the, down payment, share the equity, and you can enter into GTA market. So that's how, by collaborating with your family member, you will be able to buy a house and you can fulfill your dream. So that's how the down payment options available like in Canada.
Absolutely, absolutely. I would highly encourage anyone who's watching this to think and maybe give Divyang a call and find out what down payment options specifically they have. Because again, you can get several adults together to buy a house, family members, and that kind of thing. Anything to kind of get your foot into the door of the real estate market. And then later on, as you build equity, there are other options that you'll be able to give them that they can do. So great idea. Good stuff.
Like some of my friends, what they are doing is, they are buying a duplex, right? So what they do is, they bring the down payment like 50-50 or 50-60, whatever their scenario is. One family stays upstairs, one family stays downstairs. So that's how they can afford the home, they can own the home, and take advantage of the great appreciation in the GTA market.
Great idea.
So if you want a great appreciation, good chunk of money, then GTA is the base market, and this is the strategy you can enter into the real estate market.
Absolutely, absolutely. I've known many investors that have done just that. They started out one house, renting out a portion of it, then second, third, fourth, fifth, and they're on to their sixth and seventh properties. Great idea. Great idea.
Yeah. Okay, Andrew, you know what? We just talk about the seller's motivation, but let's talk about the buyer's perspective. Like, what are the tips for the home buyers who are, purchasing houses during the winter time, especially when there is a snow outside, they can't see some outside portion of the house. So what are your tips in this scenario?
Very good question, especially winter-wise. It's something that comes up obviously every year in Canada, certainly in the GTA. In general, I have pretty much the same thing to say to buyers, but especially in winter, it goes like this. One of the first things you should do as a buyer, and this may sound very silly to someone who's a professional like you, is that just to be available. Being available is a big deal. And why I mention that is you mentioned the aspect of snow and bad weather. And obviously not everybody wants to see a home in the beautiful sunshine in the middle of the summer on a nice day with the grass is green and everything else. But if you think about it this way, think about everyone is thinking the same as you. So if you're kind of hesitant in going out to see a home, so are many other buyers. And if you keep that in your mind, what you'll realize is, wait a second, this is actually a great opportunity. And that's something that I've mentioned to many of my own clients in the past few years. And I dare say, I've had quite a lot of success in the winter, especially in bad weather. One of the reasons being, well, again, because sometimes buying is not something that people are doing actively and aggressively, as they really should. And I try to get my clients to do that. Sometimes it's very passive, almost like a hobby. Now, admittedly, sometimes it is a casual thing. Just it's nice to look at homes. That's not a problem at all. But one of the advantages of being a buyer in this kind of weather is that there is less competition. And if the weather is bad, and you actually dare aggressively go out and still look at homes and see properties when it's a little bit of snow, you have to go through a little bit of snow, you have to go see things when it's a little bit darker outside. You'll realize that the others are not doing it, and therefore you as a buyer actually have a very advantageous position. And at the same time, because sellers are not getting as many showings because of bad weather and these kinds of things, buyers may actually have, again, an advantage in that aspect as well. You might be the only offering. You might have a little more flexibility in the price or closing and those kinds of things. So I would say, especially in the GTA, we've discussed the difficulty of getting into the GTA market.
Yeah.
You would want to take advantage of any possible advantage you possibly can.
Yeah.
And in the winter, bad weather, other buyers losing motivation, holidays taking people's attention and focus away from the home search process, those buyers who are still in, oh, they can take advantage of this.
Okay, that's a great stuff to know.
Divyang, one of the things I hear about, obviously, income is a big deal, and down payment is
Yeah.
a big hurdle. Those are the two things people talk about. But there's also the aspect of the credit score. Honestly, how important is the credit score?
Yeah, you know what? I can say like the credit score is the heart of your financial profile because that is what gonna decide whether you are going to qualify with A lender or B lender.
Oh.
So the thing is, if you want a base mortgage deal from the A lenders or banks, your minimum credit score should be more than 680. So that's when you will be eligible to apply to the A lender. If you have less than 680, forget about the A lenders. Now, here are my few tips about how you can improve your credit score and how you can maintain your credit score higher. So my number one tip is always pay your bills on time. If you have habit of forgetting the stuff, my best advice is to just automate the payment, right? So if you automate from your account, your credit card or whatever the bills, it will be paid automatically from your account. So that's number one thing. Number two is the utilization rate. So as a general rule of thumb, you should not exceed or you should not utilize your credit more than 30% of your like total limit. Let's say if you have $10,000 credit available, you should not use more than $3,000 from that credit. That is very important. Third thing is do not close old accounts. I have seen like many people, they don't use sometime old, very old credit cards or whatever. And they think that, oh, I don't use this one, so let me close this. But don't do this because your history of the credit is also plays very important role in the credit score. So if your account is more older, that means you will get benefit of that account or you can get benefit of that situation. So don't close your old accounts. If you are not using that credit card, that's fine. Just put it in your closet and forget about it. That's what you can do. Now, another tip is have mix of credits. That means you should have, like credit cards, personal line of credits, mortgages, car loans. So when you have a mix of credits, and if you are paying all of them, in a timely manner, that will shows to the credit bureau that this person is very responsible and he is he knows his finances very well, right? Now the fifth thing is don't apply for the new credit within short period of time, because the thing is when you apply for a new credit, it's gonna affect your score because that will be considered as a hard inquiry on your credit. And if you apply for newer credits in like with 20 days apart or within a couple of months or something, it will reduce your score and it will affect your credit history. So my suggestion is don't apply for new credits to within like short period. So that's all about the credit score, how you can maintain the credit score and how you can improve the credit score.
a question that I get regularly. Say
Yeah.
somebody slips up a couple of times on a credit card, they forget, maybe they're
Mhm.
out of the country for a few months,
Yeah.
and the credit score obviously goes down a little bit. How long does it take to increase or better your credit score substantially?
Yeah. So when you miss the payment on your credit card more than 30 days, it's gonna show up on your credit,
Hmm.
and that missed payment stays in your credit profile for up to 7 years.
Wow.
Yeah. Now, many lenders, when you have a missed payment in your credit profile, most of the lenders will ask the reason about that missed payments. So if you have a valid reason and genuine reason, some lender will try to accept that reason. But if you have many missed payments in your profile, your credit score is low, then it will be difficult to work with, especially A lenders. Now, how fast you can improve your score? So it depends on the financial profile. But I can say, like generally, like you will be able to achieve your score, like up to like more than 700 or something, like maybe in 2 years or something.
Hmm.
That's when you will be able to get your score, or you can improve your score. That's the timeline you can keep in mind, like 2 years or probably 2.5 years.
Yeah, which is not a short time, which means credit score.
Yeah.
Very, very important.
Definitely, yes. Okay, Andrew. Now we have covered, many things about the market. Now, can you tell me, like, what are the statistics going on in the market right now?
Yeah. One of the things about the GTA, it is the Greater Toronto area, encompassing many neighborhoods and areas, and they're always quite different. So, generally speaking, for the Toronto Real Estate Board, having been around for over 100 years at this point, there are certain numbers you want to know just as a general rule. And I tell my clients these things on my monthly updates regularly, just so they have a rule of thumb to go with, a baseline of knowledge. So, one of the big numbers is 20,000. And 20,000 is the number of active listings that create, give or take, a balanced market in the GTA. Active
Okay.
listings meaning condos and homes that are on the market currently available. And so when you're roughly at about 20,000, that is where you are balanced. It's neither a seller's market nor a balanced nor a buyer's market. And then, of course, that changes a little bit depending on the areas. Once you start going above that, and we have not been there in many, many years, up to 23, 24, 25,000 listings, at that point it becomes a buyer's market officially. And across the board, so to speak. And of course, it depends on the area as well. But generally speaking, that is when things get much harder for the seller and much easier for the buyer because the selection is there and the competition is a lot less. The opposite is also true. And that is where the GTA has been for probably the past 10 years or longer. And that is more of a seller-friendly or seller-leaning market. Once you get into 16, 17, 15,000 active listings on the Toronto Real Estate Board, you're into a seller's market. We have been in areas where we're closer to 10,000 or 12,000. And if you're thinking of beginning of 2017 or beginning of 2022, the inventory was lower and the demand is constantly strong. And so at that point, it is a very difficult time for buyers. That is when you find multiple offer situations. You find people bidding for, 6, 7, 8 times their different homes before they actually purchase something. It's very exhausting to the buyer. So those inventory in general is good to know because demand is predominantly, with the exception of this year and the very beginning of 2020 with the COVID lockdowns, outside of that, demand is always strong just because of the GTA. So that number is well known. The other number I would always look at is days on market. Currently, right now, towards the end of 2023, we're looking at days on market of about 39 on average, which is high and certainly over a month. And so as a buyer, I would look at that and say, okay, so clearly there's some time for me to find something. Also, it's a good time for me to be out there because clearly things aren't flying and maybe I'll have less of a chance of going into a multiple offer situation. As a seller, it gives me a very realistic outlook on what's happening in the market. So if I put my house on the market and it doesn't sell in 2 or 3 weeks, as I'm used to in the previous years, I'm not panicking. I'm not thinking anything strange because on average, it's 39 days. An average, of course, has a lower and a higher. And so therefore, those are things to consider as you're hitting the house on the market. Other than that, those are numbers you want to know in whatever area you're looking.
Okay.
What the days on market is, what the things have been selling for, and then going from there.
Oh, okay. That's good stuff to know. Like what is buyer's market and what is seller's market, because many people don't know. Like when is the right time to buy. So that's a good stuff to know. That's great.
So down payment, credit score, pre-approval,
Yeah.
absolutely. There's one question that constantly comes up and people don't know about
Yeah.
are the actual total closing costs that a buyer has to assume upon closing.
Yeah. Okay. So this is the questions, these are the questions asked by many of my clients.
Absolutely.
And many people don't know that, there are closing costs involved when you buy a house. They just consider, I just need this much down payment and that's it. But in reality, there are other costs involved in the closing process. So what are the closing costs? So number one is the land transfer tax. So whenever we are going to buy a house, we need to pay the land transfer tax. Now, this tax is, if you are a first time home buyer, you will get a credit for the land transfer taxes. But if you are a second time home buyer, then you will have to pay the land transfer taxes. If you are buying in Toronto, you will have to pay double land transfer tax.
Mhm.
So that's what you should keep in mind. Now, another cost is the property survey. This cost is paid by the buyer because sometimes with the older homes, most of the times they don't have the survey available. If you want to protect yourself, I would suggest to buy a property survey so that you will know like what are your boundaries, right? And that's way you can avoid any future conflict with the other property owner. Third thing is the home inspection. I have seen that, especially in GTA market, many people are skipping the home inspections. I would never suggest to do that. So, yeah, because it's a bad idea.
Yeah.
So, home inspection is also another cost involved. And as a buyer, you are responsible to pay that cost. Another stuff is the appraisal cost. So, that most of the time, A lenders is going to they are not going to charge you for the appraisal cost because they have like a automated system, we can say, based on the selling data in particular area. They will have that thing in their system and they will be able to find out what is the current market value of your house. So most of the time you don't need to pay this appraisal cost, but you should keep in mind that you might need to pay this appraisal cost from your pocket. Another thing is the title insurance. This cost normally uh, included in your lawyer fees, right? So sometimes when you get your final statement from the lawyer, it will be there that you can see title cost with the title insurance. Another thing is the government registration fees. So this is a kind of ownership transfer from one owner to the another. So that is normally charged by the government to register you as a buyer on the title. So that's the government registration fee. And the final cost is the lawyer fees. Whatever the transaction happening for transferring the title from the seller to the new buyer, that will be taken care by the lawyer. And you will have to pay the legal cost for all the transactions. So make sure that you have a good real estate lawyer
Yes.
who can protect you from future disputes.
Absolutely. You want to make sure that they're a good real estate lawyer with real estate experience specifically.
Yeah.
And as you were mentioning, know which costs are covered in the lawyer fees, including the registrations, all these types of things.
Yes.
And they should be able to give you a breakdown of that as well. So great point.
Yeah.
Hey, beautiful people. Andrew the Realtor here with my friend Divyang Patel, mortgage agent, independent mortgage agent. And this is totally voluntary. He didn't ask me to do this. I want to do this because I feel the independent mortgage brokers and mortgage agents like Divyang are incredibly important. I'll tell you a few reasons why, especially me as a real estate professional. So first of all, they don't get paid unless they get a deal for you, which means they also work for you. And one of the things a lot of folks don't realize, and there's nothing necessarily wrong with this, is that when you go to TD, RBC, BMO, all of which I have great people at, those folks work for the bank. They don't necessarily work for you. And so a certain person at the bank will be selling that insurance, that mortgage product, that financial product to you from that specific bank. not Divyang. Divyang is going to actually shop around to other lenders and work for your best interest until you get the kind of product that you want. Not only good interest rates, but also the kind of product, something that is portable, assumable, all the kind of things that he'll be able to explain to you. I find independent mortgage agents incredibly important, insanely important. In my business, they're very big because unlike banks, we have bankers hours. Guy like Divyang is able to you can get a hold of him during the evening, during the weekend, or me as a realtor can get a hold of him at the time we have to put in an offer, say, Divyang, this is the price of the house, this is the property tax, can we do X on the price? And shortly after, he'll get back and say, yes, we put in the offer, not waste any time and lose out on a great home for the buyer. So I always recommend independent mortgage agents. Divyang is a great one. Make sure to give him a shout when you have time or when you're looking for a home, or if you're starting to think about it, he can start walking you down the process of home ownership in the GTA.
Thank you very much. Thank you very much, Andrew, for your kind words. And definitely, if you have any questions related to mortgages, you can contact me anytime at 647 740 8902.